Hello, today is January 25th, 2014. I'm Jeffrey Tennant, and let's discuss Friday's wild action on Wall Street. At Thursday's close, I said I liked this recovery, and that if we could avoid gapping under this low, we should have higher prices with a target of 1829.98 plus. Well, we gapped under the low, so that call was off the table. This was the kind of decline I was looking for since New Year's Eve. Quite frankly, I was looking for it much earlier in the month. Let's review what mejt is saying first, and then let's look at the market as a whole. The 1829.98 plus target is based on an ultimate signal. These things almost always print. You usually don't have to wait too long, but there's no time limit. In the futures market, late Thursday, we had a print of 1828, which is equivalent to satisfying this target had it printed during regular trading hours. And that was the high, so for someone using this signal in the futures market, it was pretty helpful. The rules state that mejt targets have to print during regular trading hours, so that print during the futures trade does not count, and the signal remains alive. Early on Friday, we had a sell signal right here that ultimately lower prices would print, which they did. mejt says that this decline is not for keeps, and it targets 1805.87 plus, most likely by Monday. I don't think this will happen. I think that target will fail. Let's not forget that at times of major changes in trend, the incidence of failed targets increases. mejt likes to leave a failed target behind as if it wants to fool investors into thinking they will have a second chance to get on the train. That's all the system is saying right now. Let's go over, based on other factors, what I think will happen. I'd be very surprised if we did not get follow-through to this decline early Monday. And if we didn't get follow-through, and particularly if we gapped up, which I'm not expecting at all, that's the sign that something funny is going on. I expect that the decline will continue. I think we should satisfy the failed target of 1777.31 from December 18th, and I have reasons outside the system for believing that we will hit just under 1771 cash. There doesn't have to be a stop and reverse at that point. That's just a minimum target. I think it's possible we reverse there, and the reversal could be strong. It's a price level at which we should be attuned to a possible change in trend. Let's look at the longer term picture. I've been saying since late last year I think we could have a major top. Let's get some more targets. This is a chart from December 18th, 2013. There's a well-known pattern called the Federal Open Market Committee whipsaw. The FOMC made its announcement at a price of 1779.18. The first move was down, and that tends to tell us the direction of the next sustainable market move. The second move was up. It tends to be larger than the move down. and it was up by 71.66 points to the all-time high. The theory says we are going to get a third move down. It's going to be larger than 71.66 points is measured from the point of the announcement, and that means we will undercut 1707.52. That's quite a drop. I'm not certain the drop will end there. The sentiment readings at the high are compatible with a major market top, which could last years. Don't be fooled by the extreme oversold readings we have on a variety of indicators now. Sharply oversold readings at market lows tend to signal the move is over. Sharply oversold readings at market highs indicate that the decline is just beginning. And I think we could have a drop which could last years and take us much further than anyone now believes possible. And for starters, I think if we get through the 1600s, as I think we will, that all of 2013's gains will be reversed, and I think we'll even go lower than that. And that's today's call.